traders, what's good? It's been a while, it's been 3 months since I recorded my last video, but I've been away because I've been focusing a lot on my own trading, not doing any one-on-ones or teaching or anything. For the people asking on Instagram, um, yeah, they know that's what I have been answering. But yeah, for the first 6 months of this year, I decided not to teach, not to do anything. But I want to come here on YouTube and do videos on educational stuff that can be eye-opening for you guys that follow me or like the way I trade. So for this one, I made a poll on Instagram, I believe on Saturday, and there was two options on whether you wanted to see POI refinements or um, swing points, strong and weak swing points. And I'm also going to do that video, but since you guys voted for this one, so I'm gonna do this one. And this first one is gonna be just theory, and then I'll do a next one on back tested examples and also forward testing examples where I'm going to refine the zone and we're going to see together how it's going to play out in the future. So for this one, um, yeah, I'm going to go straight to the video. So when we usually have a zone, let's say on the 4 hour time frame, it's usually going to be the last sell to buy range or the last sell before the impulse up or the last buy before the impulse down, and then we mark that zone. So on the 4 hour, usually our zone is the last, let's say this is a bullish example, right, for a buy. So we'll see a move down, an impulse up, and then we mark the move down as our zone of interest, expecting that price is going to come back and continue up. So when we start refining, we usually go down 1 or 2 time frames and we start refining. When we go to the 1 hour, we'll see a very last push down or last candle down before the move up, and then our expectation is the same. We are expecting this. And when we go to the 15 minute, usually we see more detail. What happens is we see the stop hand, which we like to see, and then the impulse up. So we know that there is a zone here where price is going to come back to. Usually we like to refine to the extremes, and then price should go up like this. And that's only expectation. We know that in reality, when we refine, the more we refine, the less probable our zone becomes, unless you have liquidity um, supporting your zone. What usually happens, and the reason why I personally used to miss trades is because I didn't look at the breakers, only order blocks. And the breaker is usually the last move up before this top hand that I saw. So the breaker is usually on this zone here, right? So if you have a breaker and there's liquidity support in that breaker, something like this, a new breaker structure, that's your inducement. There is no way, usually, anything can happen, but the probability of price running that low and coming all the way down here and then move up, it's very slim. It's very small. So this is the cases where I expect the breaker to hold because there was liquidity here supporting my zone, right? The zone I marked. So, and the answer for whether you're going to look for the breaker or the order block is basically the liquidity above or below the zone of interest. So let me just show you in terms of candle how it looks. So this is what we see on the 4 hour. This is how we refine on the 1 hour and on the 15 minute. I know there's, if you count the candles, they don't add up, but it's just an example, okay? Just chill, guys. So when you go to the 15 minutes, we usually like to refine to the extreme, and you will see many examples where price will just come here and start going up without coming back to the zone you refine. And the reason for that is that you have this breaker, The breaker is basically a failed order block. So this was once a buy to sell. Price should come here and continue lower, but instead it breaks. So the expectation on the breaker is that price will come back here. But when will I look at this zone for a trade? Only if and only if I have inducement supporting the zone. So if price runs this, I expect price to react to this breaker. It may be a short-term reaction, but I expect it to be a tradable reaction. So if I do this, the safe stop loss should be here, but because of the breaker, I'm going to refine my stop loss or reduce my stop loss to just below the breaker, and I expect this to hold because I had liquidity supporting the zone. All right. So let's say now price comes straight to the breaker and reacts. Now I'm not gonna take this. I'm expecting price to come back, run this liquidity, and now my extreme zone is likely to hold or to play out from because there is liquidity supporting this. So when you're deciding whether you want to use the breaker or the order block, always look to liquidity before the POI and choose the POI that is closest to the liquidity that has been induced. So if you have something like this, price returning and then exploding up, which one is the closest? Which POI is the closest to this liquidity? Is it the breaker or the order block? It's clearly the breaker. So on this case, I'm going to expect the breaker to hold and price to go. If it comes straight here, then the breaker is mitigated. Now the closest POI below that liquidity is going to be the order block. And that's basically how I decide whether I want to enter the breaker or the order block, right? So this is just a theory video, just to raise awareness, and you can probably, before I do the practical examples on the real markets, you can go and backtest it yourself and see how you can refine a 4-hour order block with both a breaker and then another block. So one thing I want to add, which I didn't say on the video in Portuguese, is usually when you have some zone like this, right? Something like that. Your last sell to buy, you will have if you draw a fib with premium and discount, usually around the 50% up the zone here, you will see breakers, and here you will see order blocks. So this is one thing that I want to add to this one. So above the 50% of that last push down before the push up, you will find your breakers and mitigation blocks, which I don't use, so I'm not gonna talk about them. And here you will see the OBs and unmitigated wicks. Yeah. So, but I'm gonna show you that on the practical video. But this is what I want you to pay attention to. Breakers, they are usually here. And if your only refinement is to take 50% of the zone, you might miss the breaker and mitigation block setups, especially the breakers, which is the one I'm talking about on this video. So this is basically what I wanted to share, and I'm going to do a part 2 of this video with examples from the market. As I said, examples from the past and examples for what I'm gonna expect in the future. And we're gonna practice a little bit um, of that theory. Okay, so let me know what you think about this video, and I'm going to do the practical examples maybe in 2 days, because I want to recover from this cold that I have at the moment. But yeah, this is what I wanted to do, and I'll see you in the next video. Peace out.